Let me turn to the economy, and I'm going to assume you just said that Chair Powell's first 5 years have been a failure, and I sense then that you do not separate his position on regulation from his stewardship of the economy, that you can't separate the two. But what about the monetary policy? Has it been adequate in your view or not?
So I think monetary policy, look, I think that easy money has been a real boon to Wall Street. But we have also had a strong economy, and we have built a strong economy. I think the role of government last year, when we put more money in as part of the American Rescue Plan, so that we could get schools open again, so we could get vaccines around the country. I think all of those have helped build the economy, and I think that's strong. But here's the part that I just keep underscoring. Yes, we can look at monetary policy and see its effect right now today, and we can play it out over what we expect to happen over the next 3 weeks or the next 3 months. But the part about failing to attend to the regulations, they're intricate, they're technical, they're not very newsworthy. But failing to attend to them, we watched what 10 years of failing to attend to them did to us last time around, and it brought down our entire economy. We can't run those kinds of risks again. It's important to pay attention to both. And that's the standard to which I hold the chair of the Federal Reserve.
Let's turn to inflation, which is affecting your constituents in Massachusetts and everyone around the country. My simple question to you is what causes it? And if I were to read a lot of what you've said and written, I would leap to the conclusion that you think the primary cause of it is corporate greed, whether it's the oil companies, whether it's software companies, whether it's food processing companies. What causes inflation?
So I think the primary cause of this bout of price increases starts with COVID and the fact that we have supply chain kinks and that people rapidly shifted the demand curve so that demand for services went down and demand for goods went up. So those two have forced prices up. That's part one. But what has also happened is that now that we live in America where there's a lot more concentration in certain industries, look at the oil industry, look at meat industry, look at groceries generally, that what's happened is these companies have said, you know, we'll pass along costs, but while we're at it and everyone's talking about rising costs, let's just add an extra big dollop of cost increases to expand our profits. Think about it this way. If all that was happening was that we have problems in the supply chain, so we're passing those costs along, margins, profit margins, should have stayed about the same percentage, right? They might have even shrunk a little tiny bit. Not happening. Those margins are increasing, and they're increasing the most where we see lots of corporate concentration. So, part one, yes, very much the pandemic. Part two, companies that recognize that because they don't face a lot of competition can goose those prices up. They're saying it on their shareholder calls. They are saying to their investors, we're raising prices, as Jerome Powell said to me in a hearing, because they